Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Thursday, January 11th, and we did it. The Bitcoin ETF is approved. Probably the weirdest TradFi news cycle I've ever seen in my entire life, with the I guess, quote unquote, fake announcement 2 days ago, followed by the SEC releasing the approval notice earlier than maybe they should have yesterday. Then Gary Gensler tweeting officially that it's been approved. And now the ETFs are actually live trading. Looks like Vanguard has banned customers from buying the ETF and a few others, but seeing a lot of demand. I've seen reports of over $1 billion worth of demand, or at least trading volume. So we'll definitely have to pay close attention to that moving forward, because we did talk about this. The demand for the ETF would certainly inspire or lack thereof in terms of immediately positive price action. But right now things do look pretty good. I'm not dissatisfied, and especially ETH being up and high beta ETH being up was certainly right along with what we had talked about, this week, the past week, kind of gearing up. So happy about that. So let's just go ahead and dive in and see what's going on. So total crypto market cap up again, up to 2.7%, 1.77 trillion. Average daily sentiment dipped a little bit. That is a little bit odd, something to take note of. Total trading volume absolutely ripped to 140 billion. I think it was around like 95 billion yesterday. Total tweet volume insane. ETH daily sentiment very bullish, up to 85 out of 100. Bitcoin daily sentiment also still quite bullish, 80 out of 100, but Bitcoin is flat. ETH is up. We got some high beta ETH sitting here, ENS, ETC, two I talked about yesterday, absolutely killing it, up 40% each. AVAX was also the coin of the day, and in terms of our members research. So if you didn't, if you're not receiving those emails because you're not a member, but we did include AVAX in our daily research, a very high sentiment coin out of nowhere. So we'll definitely keep a close eye on that one. Seeing a lot of inflows, at least recently, very flat over the past 24 hours, a little bit mixed, but still definitely looks good in my opinion. So Bitcoin daily sentiment obviously still increasing, starting to curl a little bit. And we've talked about this before. Anytime we get above 90, start to think about a possible reversal in the near term. It doesn't mean it will happen, but certainly something to be cognizant of. This can reverse. Doesn't mean we'll drop too heavy, but certainly something to be cognizant of. We'll talk about Bitcoin price in a second. ETH daily sentiment also ripping. Did not tag that 90 level yet, but definitely above 80. Definitely looking a little bit more like it wants to move higher, whereas Bitcoin possibly maybe curling lower. So definitely worth keeping an eye on. But look, ETH trading volume up, tweet volume slightly up. Obviously, more people are talking about Bitcoin with the ETF, and trading volume has exploded, but we have not seen ETH trading volume explode like this. And of course, the price versus BTC is also up 7%, along with the price versus the US dollar. So very interesting for ETH moving forward. Definitely supports our thesis so far, but we obviously want to see that continue. So before I dig into DXY and S&P, we got to talk about the CPI numbers that happened today. Now, I'm sure you can see here, these are the actual numbers: 3.4% CPI, 3.9% core. So although core was less than the previous month, it was higher than expected, and CPI came in much higher than expected, with the 3.1% being the prior month. So CPI actually went up, core went down. We had a very mixed reaction. That's why you're not seeing DXY like shoot up too much. And I did talk about the fact that if core was decreased, then it wouldn't be too negative, but certainly not what the Fed wants to see. There is a way to kind of massage this in terms of the narrative, but it's certainly not what we want to see or wanted to see. So DXY is still sitting in this range. It needs to get above 102.7 to move higher. It needs to get below 102.1 to move lower. So we're just kind of sitting here. We've got, obviously, we know our triggers, but we also still have this high right here at 103, and then we have this low right here at 101.7. That will still kind of continue to be our range. So our range is basically going to sit up here and right here. So this is kind of our range that we're sitting in. You've obviously got this deviation here. If we break above this range, you're going to tag up here and then start moving higher. So we definitely do not want that. We want to see this continue moving lower. Oops, did not mean to go back to 1 hour. Right now, there's really nothing to glean yet, but definitely some topsy-turvy data. So looking at equities, you can actually see the impact here. So we actually sold off, then we got bought right back up, right up to resistance, and then we sold right back down to the mid-range. So if you've been paying attention to this show for quite some time, I think you will notice, the one bit of good news that we did get. Remember, we talked about wanting to break above this high. Well, we did. We formed a new high. So that is positive, but that high is basically right in this little demand zone. So this is the all-time high right here is 48.20. So basically, this is kind of a massive demand zone, and I'll zoom out a little bit so you can get a bit better context. But basically, all-time high right here, right? Anytime it has dipped into this area, meaning above 47.48 and below 48.20, it's sold off, right? It basically just kind of deviated that level, but that is still the high. So we're kind of stuck in the same position where we're near the high, but we're in this little demand zone. And if we sell off out of the demand zone, definitely not a good sign, right? So we're in a precarious position, and we really want to see 47.48 hold. Now you can definitely dip down because we've got this massive range right here. This is all just one giant range. This is the deviation lower. This is the possible deviation higher. So everything is kind of fine here. But in a perfect world where we stay above 47.48, in a less than perfect world, but still promising world, we at least hold 46.93. So the way that I'm looking at equities is, of course, today's CPI, sold us off. It was higher than expected, and that makes sense that we sold off. So we're surviving at mid-range, which also has confluence with the 1 hour estimated trend moving average, the weekly VWAP. So right now things look good. If we break below this low, we have this low right here at 47.30 to kind of hold us and to kind of create a little bit of a demand zone right here. If we break below 47.30, we will then return back to 46.93 or possibly this little deviation area for possibly double bottom or breaking below. So there's nothing really to glean too much in terms of equities right now, but kind of similar stance to where we were yesterday. We were in this kind of exact same position when we talked. We want to see this level hold that it's currently sitting at 47.48. We want to see it attack back up to 47.95, and we hopefully want to create a new high, because if we're just creating a higher low here and we're creating higher highs, at least on the lower time frame, we're still creating higher highs on the larger time frame too, right? Although we did have this kind of weird little lower low. So this is certainly, this higher high right here, certainly what we wanted to see. Now we want to see some follow through. Now the worst, not the worst, the medium case scenario is we might just range like this high up here. Oops. This high up here at 47.95 and this low down here at 46.93 could just be our range. So maybe we just kind of ping pong back and forth into the new year until, we get more information in terms of PCE, which will be coming in a couple of weeks. We'll have another FOMC meeting in a couple of weeks. We'll have unemployment in a couple of weeks. So it would not shock me if we just ranged here for a couple of weeks until we ended up getting more data in, meaning we don't break lower and we don't really break higher. We just kind of sit in this range, whether it's, back and forth, or maybe, it would be preferable to kind of sit in the top half of the range. But ranging would not shock me, at least heading into next week at the very least. So moral of the story is we want to break above 47.95. We want to hold 47.48. If we lose 47.48, we want to hold 46.93. We lose 46.93, things get pretty bad. So that's pretty simplistic analysis there for equities. Looking at Bitcoin, this is going to be tough because, right now we obviously kind of understand the fundamentals. We're looking at the technicals here. It's tough to read because we don't really know what continued demand is going to be for the Bitcoin ETF. But we do know we went up and tagged close to 49K, just literally like $30, $40 off 49K, and then we sold back. So if we kind of zoom out a little bit, we're still making higher highs and higher lows, but it's starting to get to the point where this is looking a little bit parabolic toppy, and we just swept the previous high of the week and sold off pretty hard right back into the range. So not really the best signal in the world. So if we can get above 47.2, we can get back to 48. If we can get above 48, we can get back to 49. I think we understand that. That's pretty simple here. You basically just got to clear these wicks up here, and then you can get back above that, and then try and attack this high and possibly higher. Now, we obviously already did dip back lower, and we're still holding at the weekly VWAP. As you can see, that blue line still acting as support. We're just wicking underneath it. Not the worst sign in the world. So if we break beneath 45.6, we'll drop back to 44.6. And then obviously, if we deviate this fully and back into this whole range, things are definitely going to look a little bit ugly on the lower time frame. We can still make some higher highs, but definitely will get a lot harder if we break beneath 45.6, 45.7. So definitely we want to hold that. Now, in the short term, basically what you're praying for is this weekly VWAP holds. We get back above the previous daily close, and then we make our way up to 48, then hopefully 49. Also, we could just, very similar to kind of equities, is we just had a massive news event. We're not really selling off. There could still be demand, but just because there is demand doesn't mean that it'll be, new price discovery type demand. But maybe we just kind of range here as well. But the moral of the story is the way that I'm looking at this from a higher time frame. So from a trading perspective, definitely I'm not recommending shorts right now. I certainly don't want to short what I perceive to be a strong market with demand, but I'm definitely would look for longs around 44.7. Longs right here at current price, not the worst trade in the world, because you do have quite defined risk. You'd be up to 48, maybe up to 49. And then your risk would be down here at this low. So you'd risk 1.5% for 3.8%, possibly 5 to 6%. Not the worst trade in the world. So good long opportunity there. If you want to wait and think that we're going to head lower, then I would definitely say, longs around 44.7, maybe stop at this low, or if there's a new low created down here at 44.3, not a bad idea. Remember, buy on the, buy it as it eclipses that support level again, and then set your stop at that low. And then else, if you want to be extremely patient, then just wait for it to get back above 48K, and then, trade that up to 49, or possibly all the way up to 50. Remember, our next support level, or our next resistance level, is 52 and 53. Doesn't mean we're going to hit it. Again, we could just sit here and range and be miserable for a couple of weeks after a lot of euphoria. But the moral of the story is 48K resistance, 44.6K is support. If we're outside of that, then you trade down to, these support levels. If you break above resistance, then you trade up to the next resistance level. So again, no need to overextend yourself. If you're just hanging out in spot, you're looking pretty good. And we're obviously looking for trades to make, but we want to make good trades, and we certainly don't want to just ride with a very crowded trade. So long opportunity here, not the worst. Probably better long opportunity lower, or you can just be patient, wait for it to break high. So let's look at ETH. ETH BTC, definitely had a beautiful, beautiful day yesterday. So the weird thing is it is now back to these kind of range highs. So it's basically every time it's been below 0.58 and above 5537, it's gotten shoved back down below 0.55. So I read that wrong. So basically, anytime it's been in between 0.55 and 0.58, it's got shoveled back down beneath 0.55. That's the best way to say this. So if you are if you're remembering what happened back in November and December, you're probably pretty cautious here. But if we can hold 0.55, then we can get back up to 0.58. And then if we can break above 0.58, we have this massive downtrend. It's been valid since September of 22. And so then we can get above that and then start kind of moving up and past that trend. So I do think that this is a great opportunity for ETH BTC. Don't know if it's going to immediately break higher today, or not today, but in the near term. But right now, definitely looking as promising as it could possibly get, especially with people looking towards the ETH ETF. And obviously ETH is outperforming Bitcoin. So good news there. So the way looking at ETH is pretty simplistic right now. We pretty much have, as I said yesterday, above 2658, we have clean air up to 3,500. I mean, clean air. Maybe, I'm going to put a line at 3K because, market does like round numbers. So it would not shock me to see, a stoppage at 3K, but we have very, very clean air all the way up to 3,500 if we can get above 2650 2650 basically. So the way that I'm looking at it right now is above this local high or above 2655, you know, however you really want to kind of assess your risk, we should be able to run up to 3K, maybe even higher. If we break below the previous daily close, which I think actually, which is at 2584, but I think probably a better number would be 2567. If you break below 25 to 67, you basically have this fair value gap right here, and you're probably going to clean that up, meaning you'll drop back down to 2444. So ETH is very simple in the sense that if it breaks higher, it's going to zoom higher. If it breaks beneath 2567, it's going to zoom back down to 2445. Now, is that a good buy area? Yes. Got confluence with the 1 hour estimated 200 moving average at 2356. You also have confluence with the 1 hour or with the weekly VWAP, which should be hovering around 2445 by the time that drop happens, if it happens. So you've got really good confluence down there. Longs down at 2445 definitely look great to me. You do have a long play here because your risk is quite defined. So if you want a long, you'd long up to this, you know, high or possibly like target higher, and then you would set your stop at 2567, which is obviously these lows right here. So you'd be risking 1% to make 3.5%, or possibly make you know, if you're targeting up to 3K from here, then that could possibly be a 15% trade. So, you know, that's not bad value here, but things are precarious, obviously, with equities, you know, barely holding on to mid-range right now. ETH obviously barely holding on to the weekly VWAP, and ETH barely holding on to the support. Things do look good. I am still bullish. I have no reason to be bearish. I don't think you should be looking for shorts. It's just how much do you want to risk on longs, knowing that there could be some weird volatility around the corner now that this news is behind us. I do have a hunch that the market will very much look forward to this ETH ETF, but we don't know what news is going to come. Maybe Gary Gensler says something about ETH in the next week and saying, oh, we're happy about the Bitcoin ETF, but don't get your hopes up about ETH. That would probably send ETH down 5-10% just based on that comment alone. Would it get bought back up? I think so, because the market will probably be like, hey, Gary, you're probably talking out of your you know what. But you know, we have to, these are the things we have to look out for. So it's not going to be a straight line up and to the right. It could be. I just don't think it will be. We'll probably have some volatility, but I am long. I did buy more, and I'm mostly sitting in spot rather than leverage trading. Did long some ETH yesterday because we did have that, you know, have that thesis, put my win into the TTC winner circle. But you know, I think right now you can definitely relax. You can definitely take some long plays if you'd like, but I would recommend just chilling right now, at least until we know what the next week is going to bring, because we do know Sunday sell-offs, Monday range, you know, we'll have a little bit more of like clean technicals rather than people just clamoring around fundamentals and stuff like that. So I think patience is going to be a virtue here, but again, I am still bullish short, medium, or I am bullish long term, but definitely thinking that some volatility could be short term. But I'm not selling. I'm just looking to buy dips and keep close track of the news cycle. So that being said, we'll go ahead and see everybody tomorrow. Again, if you want to try Trade the Chain, www.tradethechain.com, 14 days free. Would love to see you in there. Other than that, see everybody tomorrow. Good luck and happy trading.